Welcome back to the Keiser Report. Time now to go to Washington State and speak with David Morgan of silverinvestor.com. David Morgan, welcome back to the Keiser Report.
It's great to be with you, Max.
All right, David Morgan, this is exciting stuff. You've just returned from Utah, where you took part in an historic event. Tell us what you were doing there, what's going on in Utah.
The House Bill 371 was passed into law and signed by the governor of Utah. I was invited to participate in the ceremonial signing. This is the first state in the several states of the U.S. to put back in the law the ability on a voluntary basis to do transactions in gold or silver.
Right. So walk us through this a little bit here, David Morgan. In other words, I've got a pocket full of silver bullion. I can walk into the store and I can buy a pair of shoes and give them silver bullion. How does it work?
First of all, the merchant that's selling you the shoes or whatever you want to purchase has got to say, yes, I do accept silver, because he voluntarily does or does not. So it's got to be voluntary on both sides. The law is very strict of what silver and gold they would accept. And for right now, the bill that's passed in the law, you can only use silver eagles or gold eagles. So only coinage that's minted by the federal government is accepted by this law at the current time. So that's sort of important. So what is going to take place is there is a depository that is already set up that people can deposit their gold and silver eagles into and be issued a debit card. Now it makes the whole transaction process pretty transparent, where you're able to walk into that merchant and, use a debit card similar to any debit card and buy whatever you're going to buy, and it just takes the appropriate amount of silver and gold out of your account. So once this is implemented, and it should be soon from what I've been told at this meeting, I think it could really, catch on.
Now, David Morgan, on the political frontier, it sounds as if you've got a bit of a standoff developing between the states and the federal government, because the federal government, and the Federal Reserve Bank are really not for this type of conversion out of fiat currency into precious metal-based currency. Is this part of the standoff we're seeing between the states and the federal government? Because it also applies to other political issues as well.
Well said, Max. Yes, I do. I think what you see is Utah has the ability to stand up for states' rights as outlined in the Bill of Rights. There's certain powers that were given to the federal government on a very limited basis. And the states actually have all the power beyond those limited abilities of the federal government. And of course, the federal government has usurped all kinds of power really outside the purview of the Constitution. Utah says, hey, wait a minute, states' rights. No state shall issue anything but gold and silver for payments of debt. That's the law. We're implementing it. We're putting it into law. And let's see what happens. One thing I like to address, Max, and you'll probably get to it anyway, but Gresham's law, the idea that, well, why would I spend a gold coin that's appreciating in value versus the fiat currency that's depreciating in value? And because of that fact, how much traction will we get in this, this movement, you might call it, in Utah?
Yeah, well, that's a good question, and I've seen it raised on the blogs. And people are suggesting that, well, this is a way for the state to get people to get out of their precious metal positions and to liquidate those precious metal positions. And it's a way for the kind of the intention being the opposite of what we're suggesting here, that there are some benefits and as part of a trend to move away from fiat currency. But I would imagine the answer to this would be that you need to start the circulation of precious metals trend somewhere, and once it hits a certain critical mass, then it takes on a life of its own, and people then, the benefits of having a currency that's not being, the purchasing power is not being whittled away from inflation, overcomes the perceived shortcomings of the fact that you're swapping out of fiat for precious in the very short term.
You can look at both sides. One is the free market's going to make the determination. So there's somebody out there perhaps that bought silver at 10, it's sitting there at 50 momentarily, and they say, I want to spend it, and they do. That's an example. The other example is, let's take the Gresham's law to the extreme. And that would be what Hugo Salinas Price pointed out in one of his early articles, is that it's just the idea that you can now start saving in gold and silver. Maybe people just start saving in that, spend very little, but at least it brings the awareness of sound money to the forefront of a lot of people that haven't thought of it before. Plus, you got to look at the free market. Maybe a lot of merchants will give a discount if you pay in silver or gold, whereas if you're paying in fiat, you have a different price. So I think there's lots of ways that you can see it actually, get a foothold and move onward from there.
Right, that's a good point. In other words, the merchant is very interested in getting a hold of this appreciating asset, this appreciating currency, so they might be willing to offer a discount, which would give further incentive. And the other point you make in terms of savings is a very key point. Savings is something that is the inverse of what most people in America have come to understand to be their daily management of their finances, which has been dominated by consumption and debt. So here you have the opposite of this, which would be savings and watching your savings appreciate in value. So let's say that in the state of Utah and in a few states around the country and maybe one or two countries around the world, they say we're going to go to a silver standard for commerce. What does this do to the above ground value of the above ground stock of silver, of which, depending on who you talk to, is, let's say, between 800 million and 1 billion ounces? Does it increase the demand? And if so, does it affect what happens there on the dynamics of supply and demand?
It would put great price pressure on silver. And I believe, it's already there, as you well know, but put much, much more on it. Because if you go back into history and you look at, what the average wage for the average person was back in the late 1800s, you're looking at $1 a day. And a constitutional dollar isn't even an ounce. Today's U.S. Silver Eagle is 1 ounce. I know that. But a constitutional dollar is about 0.76 of an ounce, or roughly 3/4 of an ounce. The point is simply that $1 per day was a pretty good wage at one time. So in today's fiat world, that might be $100, let's say, per ounce. And we're not there yet. And I believe we're going to get there, maybe surpass that. But once the real value is determined, and we haven't, in my strong opinion, determined the true value of silver yet, you're going to see lots and lots of upward pressure. That's why this Gresham's law is kind of important to think about, because people, once they feel that they're getting fair value for an ounce or 10 ounces or whatever they determine to use in the marketplace, then you probably see a lot more transactions take place in precious metals. But if they believe strongly that it's undervalued, then the tendency is, of course, to save it.
All right, let's talk about Gresham's law for a second, because it's something that Bill Black, the former regulator during the S&L crisis in the U.S., speaks about often as well, as being one of those, if you will, behavioral economic aspects that drives markets and finance underneath the surface a little bit. Tell us, explain Gresham's law, how it applies here. What is the law?
Gresham's law, it's commonly stated that bad money drives out good. It's more accurately stated that bad money drives out good if the exchange rate is set by law. But regardless, what it really means is that if you've got gold and silver appreciating and fiat depreciating, people will make a choice. And the choice usually is that I'll spend the fiat, it's depreciating, and hold on to the gold and silver. So there's a good argument to be made that, even with this enactment in Utah, that there won't be a lot of incentive for people to spend their gold and silver.
Right. Well, it sounds almost as if you could apply the same concept that's used in the fractional reserve banking system, the velocity of money concept, which is to say that loans become more plentiful the more that they are recycled through the banking system. You could say, apply this to silver and say there's a velocity of silver concept here, is that the more it's used, the greater demand there is for the silver, and therefore the price goes higher. So actually, by spending your silver, you're increasing the price of the savings that you have left in your silver savings account. But let's move on to supply and demand here for a second. The CPM group, what's the most bullish data in the report that's just come out and the most bearish? I know you track this stuff pretty closely over there at the Morgan report.
One of the more bullish aspects is China. The amount of demand from China, and it's of course twofold. There is investment demand in China, but particularly the industrial demand that's really never thought of thoroughly. If you go back to the Silver Institute's 2000 issue, the amount of silver used on a per capita basis in China was 1/70th the amount of silver used in the Western Hemisphere, so United States and Canada, for example. Now it's about 1/20th, so it's been about a four-fold increase in the amount of silver used, cell phones, laptops, anything electrical in China as they build and modernize their whole infrastructure. That trend continues and continues strongly. So right now they're using about 1/20th the amount of silver per capita that they were using several years ago. And again, that trend continues. So if you look at what's going on in the solar energy field, a lot of solar panels produced in China, the industrial side in China is huge. On top of that, you have gold and silver availability for investment in China as well. Well, it doesn't take much imagination to think about 1.4 billion people in China. Certainly not every one of them is going to buy silver, unless, of course, they catch on to the Max Keiser, buy an ounce situation. But seriously, there's a lot of pent-up demand available in China and, of course, other places as well. I see that would be one of the most bullish things. On the bearish side, what's interesting to me is that the recycling has started to increase. And as I've thought about it more and more, it's very likely, because there are more electronics, some of them can be recycled. Some of them are uneconomic to recycle, but they're mandated by governments to be recycled. For example, in California, some of the circuit boards that are not economic to recycle, still the law states that it must be. So even at a loss economically, the government has stepped in and said this silver must be recycled. So the idea is that I thought with the photography going to very low level silver halide photography and replaced by digital, that recycling would be in a major downtrend. And it has been for a few years, but now it's starting to come back up. So I'd say that's slightly bearish. That's about the most bearish thing I could find in the report.
All right, well, that's all the time we have for on this episode. David Morgan of the Morgan Report. Thanks, as always, for your contributions on the silver side of things. And would you say the trend and the bullish trend is still intact? Is that your basic bottom line?
Absolutely, Max. You've seen my lecture there in London and also in France. I'm extremely bullish. You've seen my 10-year projections. Certainly, the price of silver, like anything, goes up and down. But we're far, far, far away from the ultimate top in the silver market.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, David Morgan of the Morgan Report. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.
David Morgan with you. I'm here in Utah at the Old Glory Mint, and I just want to again emphasize what a historic day I witnessed yesterday with the ceremonial signing of House Bill 371, which allows gold and silver to be used in commerce in the state of Utah on a voluntary basis. What I found interesting is that the implementation is going to be actually very streamlined, because people will be able to deposit their gold and silver coins with a depository and be issued a debit card. So basically, to a merchant in the state, they won't know really what's going on from the aspect that you just produce a debit card, make your transaction, it debits your gold or silver coins, and you go about your normal business. So I think it's a rather ingenious methodology. It should be starting very soon. I met many of the players, and I'll be reporting about this more in the Morgan Report as we follow the progression of the first state to reenact gold and silver coinage as legal tender. And again, I want to commend and salute Utah for being the first.
Buy real, get real, be real.